Welcome to the Jill on Money Call of the Week. We're presented by Marcus by Goldman Sachs. If you've got a financial question, something that's kind of niggling at you, just send us an email. Ask Jill at jillonmoney.com. Ask Jill at jillonmoney.com, and we will be happy to help you out. That's what Clayton did. Clayton's on the line from Austin, Texas. Hey, Clayton, how can I help you out today?
Hey, Jill. How are you?
Great.
Great. Well, thanks for taking my call. Wanted to run the situation by you. So back in February, I started with, I guess, what they call one of the FANG big tech companies.
Mm-hmm.
And within the compensation package, you're given restricted stock units. My situation, it vests over a 4-year period. So in February, I'll have 5% of my stocks vest. On that date, you're given 3 options on what you can do there.
Mm-hmm.
So you can either sell shares for taxes,
Mm-hmm.
That 29% tax rate. You can sell all of your shares, obviously, or you can pay as an employee, just pay cash for the taxes, so you can kind of hold on to those shares. Wanted to get your thoughts on what I should do there.
Okay, so just so I understand the way the program works, every year, part of your compensation is given in stock, which is then subject to a 4-year vest. It's not just your first year, right?
Exactly.
Okay. So you're always going to be accumulating this stock, right?
Exactly.
Okay. So that's an interesting dilemma because, even if it's the best company in the world, and since it's one of the FANG companies, I know that it's one of the really biggies, right? Then, your inclination may be, well, I'll just hold on to everything. But you would be accumulating an enormous position in that company relative to all the other money you have invested. So what is your taxable earnings? And then I want to know really what the cash earnings is, what you're living on.
Taxable earnings is right at 120.
Okay. And of that, a bunch of that is in stock. So what do you figure you actually need to live on that you're taking home?
About the 95.
Okay, got it. Tell us a little bit about your life. Are you single? Are you partnered? Do you live in a house? Do you rent? What's going on?
Yeah, currently married, and we actually just bought our first home.
Oh, congratulations.
Yeah, thanks.
Does your spouse work?
She does, yes.
Okay. So together, how much do you make?
Right about, I guess, 200 total gross.
Okay, got it. Does she also work for one of these big tech companies, or is she in a different business?
No, in a different business.
Okay. So I like that, a little diversification, right?
Mm-hmm.
Okay. And kids?
No kids.
No kids. Okay. Now, here's a question for you. Of your total money that you have that's outstanding, right, how much of that is in retirement versus non-retirement? So how much do we have in an emergency reserve fund?
Emergency reserve have about $20K.
Okay. Any other investments outside of retirement?
No. Yeah, all in retirement.
Okay, now tell me about how much money you guys have in retirement together.
So we have about $50K in just both of our Roths, so about 25 each.
Yep.
Roth IRAs, and then within our 401ks, probably another 50 total.
Okay. Do you, in your 401k at work, do you also have the option of the stock, of the company stock as well? Are they matching into that stock?
They are not no, they're not matching into that stock.
Okay, good. I'm just trying to figure out how much you have of now. So now, you know, how much money are we talking about that's in the stock itself?
Let's see. Currently, I guess what's on the vesting day of February.
Yep.
Probably about $6K.
Okay. So you're going to keep accumulating this stock. The upside of just saying every time a slug comes due, I sell it, is that you get disciplined because you're going to continue to accumulate the stock over time. You know, if you have listen, I don't know how long you're going to be there, but let's even just say over 10 years, you're going to keep accumulating stock. Right now, considering that you have about, let's say, $100,000 that's invested in retirement assets, having $6,000 in an individual stock does not scare me at all. That's not a big deal. So in some respects, I'm sort of early on, I sort of feel like, yeah, you know, you could leave it alone. However, The best practice would be that every time a slug of shares comes up to sell, you sell those shares so that you keep allowing yourself the opportunity not to get over concentrated in the stock. I don't know if you have to do it this time, but I do think that you're going to have some sort of disciplined game plan so that you don't end up, 5 years from now saying, I've got $150,000 in retirement assets, and then I have $80,000 in the company stock. My best advice to you is this. Maybe this time you let it go. No biggie. You can pay the cash. You can pay the tax that's associated with this. And you guys are in a pretty low tax bracket together. But I do think what's really important is that you keep in mind you should try to only have anywhere between, let's call it the most you should have is 10% in that stock of your total invested assets at any time. Even if it's the very best stock in the world, it's much more prudent for you to build up your assets, diversify. Because again, if something bad happens, if just we have like a tech bubble that's bursting, which may be happening as we speak, even if the stock goes down, you'll be disciplined and say, I'm going to take money when it's down, I'm going to take money when it's up. And essentially, if you do that once a year, you should stay out of trouble. I think that's the best practice. But I think for this very first one, because the amount is so small, maybe, if you feel like you want to keep it and that's what you want to do, that's fine with me. I would just generally be disciplined, sell my shares, pay the taxes, and keep accumulating the stock. How do you feel about that?
Perfect. That actually helps so much.
Okay.
I appreciate it.
All right, great. Good luck. Take care, Clayton.
Thank you. Bye-bye.
Bye. Okay, that's the call of the week. If you have a financial question, just give us a holler. Send an email to askjill@jillonmoney.com or go to the website, jillonmoney.com. You can click the Contact Us button right there. Oh, by the way, while you're there, sign up for our free newsletter. It's free. Why not? We drop new episodes of Jill on Money every Tuesday and Thursday, and you can download the show anywhere that you get your podcasts. Apple, Google Play, radio.com, Stitcher, wherever. Our music is composed by Joel Goodman. Mark Talercio is our executive producer. We're distributed by Cadence 13, and our show is presented by Marcus by Goldman Sachs. See you next week.